Live from Beit Shemesh and broadcasted around the world, you are listening to the Frum Entrepreneur Podcast with your host, Nahum Kligman. Interviews and advice from Jewish entrepreneurs from around the world. Listen, learn, be Masliach.
Welcome to episode 11 of the Frum Entrepreneur. And today I have with me a special guest, Dovid Mark. Dovid is the founder of Fundz, which is a global community of supporters of entrepreneurs, mentors, creating a new way of microfinancing, helping startups. It's really a privilege to have Dovid with us. Dovid, you there?
Yep. Thanks for having me, Nahum.
It's a pleasure. I love meeting other entrepreneurs and meeting people that are helping the ecosystem. I wanted to, first get a little bit of an overview of what Fundz is all about. Then we'll talk a little bit more about your background, how you came to Fundz, and then we'll dig in a little bit deeper. How's that sound?
Sounds good.
Excellent. So tell us about Fundz.
So Fundz is really an outgrowth of a lot of the work we've done with equity crowdfunding platforms around the world. And we sort of want to find a way to streamline a few different components. One, consulting, and number two, really like financing opportunities for young startups in emerging markets. This could be Africa, Asia, South America. We get tons of emails every day and from startups around the world saying, hey, can you help me get a $30,000, even $500,000? And obviously they, access to cash in these places is very, very limited. There's a great angel community in Africa, but if you're not part of the angel community, you really have no opportunities to get out ahead. And most of these startups don't really realize they can do a lot with a little. So, they want to raise $500,000 and really all they need is $5,000 to get jump started. So it's starting. We're building a community and we're building outreach to startups. And we hope to be fully launched in another month and a half.
Very interesting. So this is basically we've heard of stories of little tiny villages, in places where the woman will make bracelets or something, and then being able to turn that into a viable product that can be sold worldwide and sort of give an income and literally change around a whole village. Is that the type of idea?
So we're trying to stay away from that because it's like a sort of a Kiva model or someone going from Kiva to KickStarter. We're trying to get into the idea that there are a lot of, let's say, a young team in the middle of Cape Town that, okay, there's an angel community there, but they themselves don't have access to that. So they have computers, they know how to program, and they have a great idea. And instead of going and trying to get $500,000, which they could get maybe, but then again, they're competing with how many other people for that same $500,000, they can come to us and get $5,000, $10,000, and get jump started at least for an MVP, and then maybe set themselves up for the angel funding they were looking for before.
Okay, so I definitely want to delve into this a lot more, but let's talk a little bit more about yourself, let our audience get to know you.
Sure.
So what's your story? Where did you come from? Where did you grow up? How did you end up in Israel? And how did you get into Fundz?
So I grew up in upstate New York, near Woodstock, in a town called New Paltz.
Nice.
So I had very diverse upbringing, access to different ideas, different cultures. And I moved to Israel 14 years ago after I became Frum.
Oh, wow. Where'd you come from?
In Africa. In
Africa. Okay, so you just skipped the whole. You went from upstate New York to Israel and forgetting the Africa part.
So a guy living in upstate New York doesn't become Frum just because he meets some Chabad store on the street. He has to have something happen to him. So I was on a trip, actually a Jewish trip, quote unquote Tikkun Olam, to help poor, disparate Africans in East Ghana build a school. And I came down with malaria. And almost didn't make it in this mud hut village. And I decided to turn my life around and find God. It didn't happen all at once, but I ended up jump starting me and asking the right questions.
Amazing.
And we ended up in Israel afterwards and went to Sfat.
Who's we?
The trip, it was a Jewish trip, so it was a kind of like the trip was bifurcated into like a Ghana part and a Israel part. So the Israel part kind of was the extra inspiration after the what happened to me in Africa.
So you had malaria how long was the program in Africa?
4 weeks.
4 weeks, and you got malaria there, and then you went to Israel with the malaria?
It doesn't always go away. I mean, this was this kind of malaria supposedly doesn't come back, but it in the early days it kind of hit every once in a while, every year, every 2 years, and just a minor fever. Mm-hmm. But it set me up to do tshuva, so it was an important experience, clearly.
So now you're in Eretz Yisrael as part of this trip, and you start asking questions. So where'd you go to ask these questions?
So we were in Sfat. We went to Karlbach, and then obviously we went back to America after 4 weeks, 3 weeks, 4 weeks. Okay. And the next year, it was my last year in college, and I ended up connecting from people I have from family, and I ended up going there for Shabbos. And, I was more mitchazek after a while, and then came to Ohr Somayach after the year.
Beautiful. So after college, so you came to Eretz Yisrael, you went to Ohr Somayach, and this is about 14 years ago?
About 14 years ago, yeah. I went to Ohr Somayach, and then about a year and a half, met my wife. went to Aish, and then we went to Yeshivat HaMiftar for Kollel.
Very nice. So, and then work-wise, how did you get to, what were you doing and how did you get to Fundz?
So I started off after Kollel at a company called RankAbove. I'm sure you've heard of them. So for a few months, and then I have two brother-in-laws that are very high up in the tech world, high-tech world in LA. And one of them offered me a job to manage his kind of faceted different sites in health in terms of SEO. So I worked on that for about a year and a half, then took some time off doing some other stuff here, and then went back to work for a company called 5 Blocks based out of Lon Shavut. Now they're in a frat.
I heard of 5 Blocks, sure.
Their reputation management firm. I became the director of web strategy there, and was there for about 3 years and decided to break off and start my own company. Clearly know what I wanted to do, but decided to do my own thing like everybody else does.
Right.
And got some seed money for an idea I wanted to do. It didn't go as far as I wanted to.
Okay.
But in the process of that building, we hooked up with OurCrowd in the early days, and we've been consulting with them ever since. So Beautiful. We were able to help them build an investor community and took those basic concepts of building an investor community and took them to other equity crowdfunding platforms. So we've worked with at least 5 or 6 from around the world, different niches, and it kind of began to grow in this direction. And we recognize that this is a direction that we're very good at, and we understand one of the few players that understand different facets of it that other people just don't understand. Interesting.
So you act as advisors to crowdfunding platforms that want to basically grow their community.
That's right. So we really understand, I think unlike a lot of other people in the industry, because we've had the opportunity to work with different kinds and in different stages, we actually understand where it's going, what the problems are, what hiccups are, in general, what makes it work, ones that work better, ones that work less good. So
now, we're not, just to be clear, we're not talking about KickStarter type stuff or Indiegogo. We're talking more about microfinancing, angel investing through crowdfunding, correct?
That's right. This is equity. This is what we call an exchange of securities, an equity exchange issuance of shares. Somebody invests in a company, they're getting shares from this. This became legal around 2012, 2013, maybe.
Right.
Like that. And so this is very new, and it's become a very big industry, very fast. And a very unknown industry,
along with assume still, changing by the week.
All the time. I would tell you, could tell you that we've had platforms that were flush with cash in terms of operational funds, and 3 months later they went under, or not under, but had to change their entire model because they went through their operational funding. And if they're waiting for an investment to be returned on a deal that they invested on, that's not operational funding. They have to actually raise their own money to run the company. So you might have a company that's like invested in 3 or 4 deals, but they have no money to actually run day-to-day
operations.
Yeah.
Interesting. So you guys are you're on top of the legal aspects in the States as well.
That's right.
Because, you're definitely talking about a multi-billion-dollar industry that, 5 years from now is going to be, just like people for the last, 100 years invested in stocks and mutual funds, I think it's going to become as simple for anybody to be able to invest in a startup or invest in a community, maybe a social entrepreneur project. So, you're definitely in the right space and definitely at the right time.
For sure.
How long do you think it's going to be till things are made that simple that, hey, I could deduct $1,000 from my paycheck and, have it automatically go into a project?
I don't think it'll take that long. The question will be the challenge of explaining to individuals the nature of how this type of stuff works. Most people don't like the idea that they'll lose their money on a lot of their investments. Mm-hmm. It's something that scares people. I can tell you, I'm not going to just mention the platform, but there have been investors in particular platforms that we work with that got very angry because they lost money. And these are platforms that explain to these are investors with a lot of money, accredited investors, and they still didn't understand or didn't appreciate the fact that it's only about every 20 investments, one will return a good sum of money. Everything else will go on or belly up or not return anything for 10 years, 5-10 years.
Right,
so these are the types of investments that it's hard to make that connection. What I see happening actually is real estate will go very big and energy crowdfunding will go very big. What I don't see yet happening is the ability to communicate why angel investing or startup crowdfunding will get to the same level of assurance for these types of people.
You don't see it going that far?
It could, but that communication gap remains. And it remains for big investors or it remains for small people.
Isn't that how mutual funds work, in a way? You just invest, a fund is invested in several stocks and some will go up, some will go down, but you're hoping overall the performance of the fund does well?
So I think that's what's going to end up happening is instead of investing in individual companies, you'll be able to invest in a fund, and you'll have to trust that fund will make the right decisions in terms of startups. So yeah, you'll lose on 7 startups, but it won't affect your money because that fund is diversified across a variety of different investments. Okay, I see it going that way. OurCrowd's gone that way. Health Funder, one of our customers, has definitely gone that way. Every single person we've talked to, if they haven't gone that way, we push them in that direction because it's the healthiest way to ensure that your users are going to feel safe in terms of investing.
Yeah, that makes a lot of sense because, even if you're like, OurCrowd and you go and you want to support an Israeli startup, but and you like the ideas and stuff, but you're not doing the real due diligence that's necessary, when you're putting $50,000 or $100,000 into a project because you're trusting OurCrowd. But, as you said, even with VCs, every 10 investments, they expect 7 to go under and 2 to do okay and 1 to hopefully hit it out of the park.
That's right.
So you need a lot of patience, and I guess that model makes a lot of sense. Investing into a fund overall and let the people that have the time and the expertise to do the due diligence and pick the right startups to invest in. I actually like that a lot. So let me ask you this. Let's say I put together a fund. Let's say I have $1 million. I want to invest in different startups. How easy is that for me to set up today?
I mean, there's legal aspects to do that. We're wondering ourselves would be the best thing to do. I think there's a lot of legal aspects that just loopholes you're going to have to get through. Israel's pretty tight on that, by the way. It's not the easiest thing to do. America's loosening up, but many of these funds aren't actual funds themselves. They work through what's called dealer brokers that are already legally passed through all the loopholes. These are, anywhere from taking tests to being, a licensed dealer broker. And that could take a while to be approved. So, in the kind of the lightning fast movement of this kind of ecosystem, these people don't want to wait that long. So these dealer brokers, and there's big ones out there, sign these platforms up to work through them. So everything can be legal.
Interesting. So you'd have to get this sort of where do you get that license? How do you?
You have to apply through the SEC. That's in America. In terms of the Israel angle, actually, I'm not so accustomed to that since we're dealing mostly the U.S.
Okay, but technically, if you're in the U.S. and you set up a fund, you can probably invest through another company in Israel to get to the.
That's right. Yeah, Israel's not going to go against whatever the setup is in America. That's for sure.
Right. Very interesting. I mean, it's a really fascinating industry that's happening right before our eyes and changing very fast and opening up opportunities. But just, like you were saying before, investors, even though, you have to be careful of being, of thinking that investing is like playing the lottery. Now you have somebody that's saying, okay, you believe in this company, you put $50,000 in, and you're expecting it to be the next Google, and in 3 years you're hoping to turn that $50,000 to $500,000. That is not the norm.
That's right. It's not the norm. And another thing is the myth that this is really very similar to KickStarter or Indiegogo, let's say, is really just not. It's a big myth out there. And part of the problem is it's called equity crowdfunding. So everybody thinks it's a large crowd. These are not large groups of people. These are, our largest group of people that we've worked with in terms of companies. They have 7 or 8,000 users or investors. And most of them aren't investing. These are groups of investors that are accredited. It's called equity crowdfunding. And in all honesty, I think I would call them large online investment clubs that also invest along institutional investors, which are, example, GE Ventures. Microsoft can come in and invest alongside a group of investors. This happens across the board in terms of equity crowdfunding platforms. And one of our customers, Health Funder, they're hooked up with 2 or 3 angel groups in America itself. So it's not everybody, it's not funded 100% by the crowd. It's maybe 30% by the crowd, and the other 70% invested by banks or other institutional investments, family offices, things like that.
So it's having your portfolio, now equity crowdfunding is becoming a piece of your portfolio.
That's right. It's considered an alternative investment class.
Very interesting. And to be a credited investor, so that has gone down, right? It used to be you had to have $1 million in assets or liquid to be a credited investor, or has that changed?
That hasn't changed. It changed from the early days, but in the last 2 years it hasn't changed. The Jobs 3, which looks like it's going to pass, will allow the non-accredited investor to invest, but under certain regulations. They have not cleared those up yet. That's why it hasn't passed yet. But the Jobs 2 Act allowed accredited investors to invest and to be generally solicited. So an accredited investor, you're right, is about $1 million. They're worth $1 million and or make $200,000 a year. That $1 million can't be part of their primary house, though. Their primary house is not included inside the $1 million. They can have real estate holdings that aren't part of their primary residence, but the primary residence is not part of the $1 million.
So, and if this Jobs 3 Act passes, So then you don't have to be a accredited investor, but you said there would be some sort of regulations, like what type of things? Like if I'm just a regular guy, I make $150,000 a year, and I want to put $10,000 into a startup. Will I be able to just do that?
The numbers are not exact, but the numbers I don't have exact right now, but there's a certain percentage of your income you're allowed to put in. That's it. You can't be, and then they have to check with the tax authority will check to see if, this will be, included on a return or not. So they're only allowed to be a certain amount of money you're allowed to put in.
Right. You don't want somebody betting your house literally.
They're very nervous about it.
They get word of and they get all excited about it, and then they're, next thing you know, they lose their home.
That's right. But most people, the crowdfunding community goes in both ways. There are a lot of, let's say, ideological leaders in it, and they would love to have everybody invest anything they want to invest. And I'm not a government person at all. I'm quite a libertarian, but I do understand for once, I actually understand the fear that the government has that you have a tremendous amount of people that like to gamble. They like to do all sorts of different things and thinking it's like a stock market and they're going to be investing their savings into these types of startups. Yeah.
Okay, so let's talk a little bit more about Fundz. So Fundz is what we just talked about, is the advisory company that advises these equity crowdfunding platforms, or you were mentioning before you actually created your own equity crowdfunding for places such in Africa?
So what we did is we originally built Fundz as an advisory company. What we've noticed over a period of time is because the ecosystem is very rocky, it's up and down. To find enough stable companies out there where we can have long-term income from them is tough. It remains a consultancy if that's the case. So we wanted to do something with our know-how that was, in a few aspects, one that would incorporate all the stuff we've been doing, and two, we feel good about ourselves giving back to small startups. Mm-hmm. And also we realize it has to be some sort of funding quality to it. We're not an equity crowdfunding platform. We're not a dealer broker, so we can't be. What we're relying on is donations, in a sense donations, if you want to put it simply. It's not exactly donations. I'd call it a support model where let's say a person in New York feels very strongly about helping a particular startup they like in our community. They can put $10 a month in, $100 a month in, and it's recurring, and they become basically part of the team. They're part of the community. They can give advice when they want to give advice. They can say, hey, listen, if you want me to keep on funding you, you have to do this and this and this. It's a very nice kind of mutual relationship going on between the startups and the people funding them.
I like that. I mean, I like that a lot. That's fantastic. But the question is, so then why only, let's say places in Africa or India? Why not even locally? Why not in Israel? Why not in America? And this sounds like a great platform for anybody who wants to get involved.
It could work that way in the future. My feeling is that impact investing, it's called impact investing, works great when you have a needy area that an impact investor might say, listen, I'm not going to make my money back. If I do, that's great. It's a high risk, but I feel good about putting X amount of money into this area. And they'll put $500,000 into companies. In Mongolia, in poor areas of India, but we're not going for that kind of cash. So I want to take the same sort of mentality of impact investing and kind of bring down the level of money without any sort of securities exchange. So most of this impact investing is really tzedakah at the end of the day. I mean, the idea that you're going to get your money back from an investment in Central Africa that you put $30,000 into, you might, but you're very high risk. Then again, they feel good about themselves.
So when they're signing off on that $30,000 donation or whatever it is it considered a donation? Is it considered an investment? Is it turned into an investment at some point down the line if they are successful? How does that work?
So for our model, we're not going after $30,000. It's $500, $1,000. It's very, very small amounts of money. Okay. We're not a nonprofit. I wanted to stay away from that. Kiva did that model, and I think it's fine, but it only allows you to grow so much. And you don't really have the corporate pool that you need to have. I think right now, what we're testing the waters at is if a community, the idea of real crowdfunding should be community generated. So if the community is large enough, people will feel good about the startups themselves to want to put some money to help them out. I do foresee it happening that they can have their own negotiations on the side for more money. And it's sort of the idea that people want to see where it's going. So they're willing to put $500 to test if it's a good enough idea. And it's a good enough idea, they can always come back and give them more for their own, make a decision between the two.
And the entrepreneurs in the company, what do they post, like weekly updates? They, let you in on what's going on behind the scenes?
That'll be the idea. The idea is that the startups have to post that. They're also going to be part of the community in the same groups that these funders and mentors are at. So they're all going to know each other at the end of the day. They're going to ask for, if they're not giving the updates, the funders will ask for updates. There's no question about it. So that's part of, KickStarter and Indiegogo work on getting a piece of the action. So it's be a T-shirt, a piece of the actual device.
Right,
this is more like
back to you.
That's right. So this is more the same idea, but it's ideas oriented. A funder will feel part of the team or feel that they're actually in it with them since they're all on the same community.
That's cool. You know what? In a sense, And I'm just thinking out loud now. It's kind of like real world gaming. Like here, you're actually able to play an entrepreneurial game. You could get in with a team of founders that are creating something, put some money in to play the game, and then you could give advice, learn from them, go back and forth, and see how a company grows from startup to hopefully full funding, and plus give you the opportunity to invest more down the line.
So it's a good way to look at it, I think.
Yeah. I like that actually, and it feels good, because you're helping out and you're helping a community and grow. But you said like some of these companies, they were looking for $250,000, $500,000, and you're saying, hey, no, only raise $50,000. Is that really enough money to get them through to the next level?
I would say even raise $5,000.
So give us a case scenario. A
perfect example is a company just contacted me the other day. They said they want anywhere between $500,000 to $1.5 million. So I said, this is a company in India. It's a consulting firm with some sort of technology. Very nice people. The presentation was lacking. I told them that. And I said, the chance of you getting investment on that level at this point is almost zero. And I said, most investors want to see a working MVP with some users. And you don't need $500,000 to put that together. In fact, you can do that on the side of your other job, right? You can actually just do that at night.
Right.
And she was like, it makes sense what you're saying. And I said, if you had $5,000, you could finish what you need to finish. If you need visas, get visas to go travel to places or sit there for 2 or 3. You can, what you need, you list what you need and you could figure it out in the short term. Obviously, you want that big bucks, but the idea of seed investment is not necessarily to live off of it.
Right.
And it's to make it rich off your seed investment. It's to enable you to become a solid company and get where you need to get to.
Right, meaning, spruce up your presentation, get an MVP out there, minimum viable product, show some minimal traction or feedback from your users or, I guess, buyers, depending on what it is. Now, is it strictly technology type stuff or even product-based?
In the early days, I think we've discussed it. We want to stay with vetted companies that people sort of know. We have a very good young partner in the UK. He's actually originally from Rwanda and Kenya, and he's very, very hooked into the angel scene, angel network in Africa.
What's his name?
His name is Obedih. I can send you the link afterwards. Very nice guy, and he really liked what we're doing, and he's really come on board. And he really understands the ground there. And, he and I were discussing early on with the idea of working through some of the angel groups there, that the guys that don't cut it, that don't make it, to their angel group, we're going to take under, because at the end of the day, those are guys that are almost there, but they need a little extra nikuda, so to speak. So we can help them out with that. Even if it's not money right away, it's advice, guidance from the crowd, from the larger community.
It's a great model. I mean, it's really fantastic. So when are you fully launched? When are you officially really going out there? What status are you at?
I like to do things in stages. Right now, we're, I would say, anywhere a little bit post MVP. We have a working model. We have not launched marketing yet. I'm still working out some kinks. So I want to make some more partnerships. We're hoping in the next month and a half to launch the beta.
Great. And do you see the governments that you're working with putting money into these type of ventures, or the cities on a municipal level?
I think my big thing is not to really deal with government. I think it blocks people. So I prefer just to go bottom up.
I hear that. It's just that sometimes, it's definitely in the interest of the communities to fund their entrepreneurs and help businesses grow, because that creates jobs and obviously is just overall beneficial throughout for the whole community. But I hear what you're saying. You want to stay away from the red tape or stay away from, any say outside of the company.
It's true. The emerging markets themselves, these economies are going through a lot of changes. It's not the easiest thing to work with governments from these places. It's a lot easier to force the change from on the ground and force the governments to come in later on.
And what about, as you're saying, there are people that want to see these companies succeed, whether it's, because they believe in the community, they just want to help out the world, or, as you mentioned earlier, Tikkun Olam approach. But, is this something that can receive foundation grants and stuff like that? Or is it only because it's for profit, you wouldn't be able to tap into that market?
So it's a challenge. If we went the nonprofit route, I'm sure it could receive grants. The question is Kiva has to do very small loans, and it's great. The question is as a product or as a platform, could it really grow as a model if it was nonprofit? That's the only question. If it can, then it should be nonprofit. It would actually open up the doors for funding for the actual platform. If it can't grow that way, then we would have to it's better to keep it private.
And throughout the process, where does Fundz stay with a company Or like after they sort of hatch, are they on their own, or do you guys see yourselves working with them and being part of the community? Even if they raised $10 million, like you guys will still be part of it.
I mean, I would love if they raised $10 million somewhere else and we're still part of the original community, that'd be great. First of all, as a mentor, as giving back to the other guys that came on board, that's the ideal. I think the idea of opening up a community enables these startups and their supporters to stay on for the long term. It's something I learned from working with other crowdfunding platforms, that they sort of did it the opposite. They opened up an investment corridor without any sort of community. And I think most investors and most startups would do well to be in the same community and learn and grow from each other.
Yeah, 100%. I mean, that's why incubators, I think, work so well.
That's right.
Very interesting. So you guys, you're just getting started with Fundz. Where do you see the vision 10 years from now, 5 years from now? Where do you hope to be?
I would hope to be, I think let's say a year from now, let's say anywhere between 1,000 to 5,000 users and 200 startups.
And so like if you're one of the 1,500, 2,000 users, that means that you're investing in 1, 2, 3 or more different projects, correct?
That's right. You're investing or you're supporting through guidance, discussions.
Wow. I really, really love what you're doing. What drove you? Like, what made you want to get into this?
Into this particular part of where we're going?
Yeah, into Fundz, into the whole idea of community helping and helping emerging markets, getting involved in startups.
I think what ended up happening is we were starting to, one of the platforms we consult with is an equity-based emerging markets platform. It's not even close to what we're doing. They're investing $500,000, $1 million, so it's a whole different end of the spectrum. But I started noticing, this is really starting 3, 4, 5 months ago, that this sort of intersection between us receiving lots of these inquiries over LinkedIn, normally basically over LinkedIn, and us seeing, wow, there's a big thing going out there in the world. And it's not just happening in Israel, it's really happening across the board, from Ulaanbaatar, Mongolia, Bangkok, Thailand, Lagos, Nigeria. It's happening really fast, but it's happening in a very chaotic way. And we really felt this intersection was happening. And Tikkun Olam is a very big thing. Being a light to the non-Jewish world is very important. And so I think Israel has the ability to do that now. And the idea to be a charity organization isn't necessarily the only way to do that. Enabling people to build their own futures is probably the best way to go about doing it.
As an entrepreneur, I would agree with that. So let me ask you some other side questions. But if you're an entrepreneur and you're looking to start up, what's some of the advice you would give them?
I would say you first need a lot of emunah and bitachon. That's me. Mm-hmm. There's no question about it. There's ups and downs. You're not going to get it right away. In fact, you're going to fail. There's no question about it. It's impossible to get it right away because everybody's different. The advice you're going to get is the advice that those people went through, not what you went through or going through. And so therefore, everybody has to learn on their own. You're going to lose money. You're going to, but it's very highly rewarding. And sticking with it frees a person from shackling their ideas to other people and to actually developing their ideas in a very wide way.
Very good. And do you have any books that you would recommend for an entrepreneur to read?
The Lean Startup is probably the best one. I found
Ries?
I found it very gratifying, and I think it's really a healthy approach. I always tell myself if I followed that approach 100%, we'd have been much better off 2 years ago. But then again, like Hashgacha Pratit, if we were been better off 2 years ago, we might not have moved into this direction the last year and a half. So everything is Yad Hashem, and that's from people have in a lot of ways much easier in the sense that we have this inbuilt emunah that we translate that to the business world, which we're supposed to. I think it does us very nicely to get through the initial 2 to 3 year stretch.
So just staying on this hashkafa level, what would you say? Obviously, everything's a matter of hishtadlus. So where would you say hishtadlus starts and hishtadlus ends with a startup?
I would say. It's a very, very good question. I was coming back from work the other day, I think yesterday, and I thought to myself, I really don't have to work so much. You get to a point where it's how much you work when you're working, not how many hours you're working. So I think the hishtadlus, you have to know yourself really well, and you have to be able to let go of needless things. There's this kind of nature in an entrepreneur to be working 10 hours a day, and it's true in the beginning. You really have to put in extra hours, and your family has to get to understand that. And there's a point in time where when you know your model already and you know your product and all you have to do is really just push it forward. And I think Hashem expects you not to overdo it. And I think there is this balance, and you just have to know yourself. There's, you have to do a lot of people to do it and get to a point where you acknowledge that you don't really have to do the amount of hishtadlus you originally thought you did.
So you're saying it's more quality than quantity into your hours.
That's right. I find myself when I'm working too much, I don't get the level I need. I was my best ideas are when I'm just walking down the street and I get one and I write it down right away and I move forward, and I don't like sit there and drill it till 3 a.m. When I work till 3 a.m, it doesn't always produce the best outcomes.
It's funny for me, my best ideas come to me on Shabbos. It's like, it's so frustrating. I think it's because like on Shabbos is when my mind finally, I get to relax. I get to stop thinking. I get to stop, just try to concentrate on Hashem and family and Shabbos, and then it frees up your mind, and all of a sudden the ideas start pouring in. I'm like, no.
It's Sitra Achra is throwing the other stuff at you. So.
Yes. And then I always say, but here, Hurim Mutarim, right? That's what
you got to remember the Hurim. That's the problem. So.
All right. You know what? I think this has been absolutely fantastic. I really appreciate you taking the time and coming on the show and sharing your thoughts and your ideas. I think it's a very exciting industry that you're in and that you're leading in a sense. I think, I'll put a link to your website, obviously, in our show notes. And, people want to reach out to you, have questions about equity crowdfunding, or they want to get involved in a Fundz project. I think it's fantastic. I think what you're doing is fantastic. And this has been really awesome speaking with you.
Great. Thanks for having me on.
Thank you, Dovid. Have a great week.
Take care.
Thank you for listening to the Frum Entrepreneur podcast with Nachum Kligman. We hope you learned something valuable, and we'll share this with your friends. For show notes, archives of previous episodes, and more information to help you start and grow your business, please visit our website.